Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Welcome to another video on your channel Profit and Equities. In this video, we'll be talking about 5 strong stocks where the stake for the foreign portfolio investors has hit an all-time high. Now friends, if you have not already become channel members, please click on the blue join button and follow the steps. This will entitle you to member-only privileges on Profit and Equities. Also friends, if you like the content that we produce on our channel, please don't forget to like this video, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Also friends, this is not our own research. This was carried out by a financial news website and we will be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Please watch this video to know more about these stocks. Now the first stock on the list is Mahanagar Gas Limited, which is available at Rs 965.45 and the face value for it is 10. The symbol for it is MGL. Now Mahanagar Gas Limited is a city gas distribution company engaged in the distribution of compressed natural gas and piped natural gas in Mumbai and its adjoining areas and in the Raigad district in the state of Maharashtra, India. It also supplies CNG for vehicles including rickshaws, taxis and cars in Mumbai, Thane, Mira Bhayandar and Navi Mumbai. Now, FPIs hiked their stake in this firm by 275 basis points sequentially to a fresh all-time high of 24.36% at the end of the March quarter. Analysts cited improving margin outlook and sustained mid to high single-digit volume growth in the past 5 quarters for their optimism on the counter. Sher Khan believes that the existing city gas distribution areas will deliver a 7% volume CAGR over FY 2019 to FY 2021. Besides, a ramp-up of Raigad district with the forthcoming international airport in Navi Mumbai and Trans-Harbour link would result in sustainable volume growth for MGL in the medium to long term. Ashika Institutional Equities notes that Shell is planning to exit MGL when its lock-in period gets over in July. As per publicly available Reuters data, the scrip has 9 buy recommendations, 11 outperform recommendations, 2 hold and just 1 sell rating as of April 23. Now looking at the 1-year chart, even though this company was consolidating for the majority of the year, of late, it seems to have begun a slow uptrend. The company is a mid-cap with a market capitalization of 9,536.50 crores. The EPS of 52.41 translates into a cheap price to earnings ratio of 18.42, which is much more cheaper when compared with the industry PE of 27.19. The book value of 212.13, however, translates into a slightly expensive price to book ratio of 4.55. The company has a decent dividend yield of 1.97%, whereas the promoter holding is below average and stands at 42.50%. Also, none of the promoters' holding is pledged. The total debt on the books is close to 66 crores, whereas the 52-week high and low stands at 1067.25 and 756 respectively. Now the second stock on the list is AU Small Finance Bank, which is available at Rs 637.95 and the face value for it is 10. The symbol for it is AUBANK. Now, AU Small Finance Bank Limited, formerly AU Financiers India Limited, is an India-based small finance bank company. The company provides wholesale banking, personal banking, insurance, and retail loan products and services. Now, FPIs held 23.76% stake in this small lender as of March 31, up 137 basis points from 22.39% at the end of the December quarter. Analysts are largely neutral to positive on the stock. The bank has demonstrated its ability to create economic moats around segments, and with a strong management team, it is best positioned among small finance banks. This was said by Nomura in a research note. However, they said, and we quote, "But we think that the street's optimistic expectations and demanding valuations of 27 times FY21 forward EPS leaves no room for error." In the publicly available Reuters database, there were 5 hold recommendations on this stock against 4 buy, 1 outperform, 1 underperform and 1 sell rating as of April 23. Now looking at the 1-year chart, this company has not really done much and has been an underperformer throughout the entire year. The company has a market capitalization of 18,650.95 crores, which means that this company is a mid-cap one. The EPS of 13.06 translates into an expensive price to earnings ratio of 48.85 when compared with the industry PE of 37.17. The price to book ratio of 7.03 is also very high. The company's debt to equity is 2.7233, which is high because it's a small finance stock. The return on equity of this particular company is 0.1403, which is not very bad. The company has a dividend yield of 0.08%, whereas the promoter holding is below average and stands at 32.19%. Another concerning factor is that 6.56% of the promoter holding is pledged. The company has a total debt of 8613.4 crores on its books, whereas the 52-week high and low stands at rupees 748.40 and 500.50 respectively. Now, the third company on the list is National Aluminium Company, which is available at rupees 52.75 and the face value for it is 5. The symbol for it is NATIONALUM. Now, National Aluminium Company Limited is engaged in the production of alumina, aluminium, and power. The company operates in three segments, which are chemicals, aluminium, and unallocated common. Now, FPI holding in this stock hit an all-time high level of 11.9% at the end of the March quarter, but analysts are not so bullish on the near-term outlook for this stock amid softening aluminium and alumina prices. The scrip is down 38% in the last 1 year. Global major Alcoa's March quarter EBITDA was lowest since December quarter of 2016. MK Global is expecting the company to report a 6% drop in sales to Rs 2,691.7 crores for the March quarter and just 1% rise in profit at Rs 253.20 crores. In an interview, Nalco CMD TK Chand said that the cost of production of the company may come down a little because of the slackening prices of caustic soda and other materials, but it will critically matter how the fuel and coal behave because power accounts for 40% of the company's expenditure, is what Nalco's CMD had to say. The scrip has 5 buy, 3 hold and 1 underperformed calls in the Reuters database on April 23. Now, this company also has a similar trajectory and has been an underperformer throughout the entire year. The company is a mid-cap with a market capitalization of 9,841.13 crores. The EPS of 9.41 translates into a dirt cheap price to earnings ratio of 5.61, which is much more cheaper when compared with the industry PE of 19.44. The price to book ratio of 0.94 is also very cheap. The company has a debt to equity of 0.0305, which is also a very good number, and the return on equity here is a bit disappointing and stands at 0.0603. One very strong factor about this company is the very high dividend yield, and this stands at a mind-boggling 10.81%. The promoter holding is just above average and stands at 52%, out of which nothing is pledged. The company has a total debt of 402.4 crores, whereas the 52-week high and low stands at 82.60 and 46.20 respectively. Now, the fourth stock on the list is Tata Global Beverages, which is available at Rs 213.20 and the face value for it is 1. The symbol for it is TATAGLOBAL. Now, Tata Global Beverages Limited is a beverage company engaged in the trading, production and distribution of tea, coffee and water. The company's principal activities include processing and blending of tea, including manufacture of instant tea. The company's segments include tea, where it is engaged in the cultivation, manufacture, blending, and sale of tea in packet, bulk, or value-added forms. The second segment is coffee and other produce, which is engaged in the cultivation of coffee and related plantation crops and sale of coffee in various value-added forms. The third segment is others, which includes sale of water products and other businesses. Now, as is evident from the 1-year chart, this company has been an underperformer and a lot of wealth has been eroded here. Now, JM Financial feels the company's near-term operating performance could be healthy due to a low base, while intrinsically weak business construct makes the stock less compelling as an investment theme. The company recently reported a 49.70% drop in consolidated net profit for March quarter at Rs 35.99 crores. Kotak Institutional Equities sees value and promise in the TGBL story, but believes the pace of progress keeps lagging expectations. While recommending a cautious stance on the stock, the brokerage trimmed their margin expectations and cut FY20 and 21 estimated EPS by 2 to 4%. TGBL remains a story of hope, with several parts of the SOTP worth owning. Challenges consistency in performance is what the brokerage has to say. The street view looks neutral with 2 buys, 1 outperform, 2 holds and 1 underperform rating in the publicly available Reuters database as of April 23. Now, this company is a mid-cap with a market capitalization of 13,455.69 crores. The EPS of 6.47 translates into a price to earnings ratio of 32.95, which is slightly more expensive when compared with the industry PE of 28.64. The price to book ratio of 1.81, however, is not wildly expensive. The company has a debt to equity of 0.1939, whereas the return on equity for this company stands at 0.0568. This company does not pay out any dividends, and the promoter holding is also slightly disappointing and stands at 34.45%. Also, a slightly worrying factor is that 3.99% of the promoter holding is pledged. The company has a total debt of 1421.7 crores, whereas the 52-week high and low stands at 300 and 177.05 respectively. Now the final stock on the list is Manappuram Finance, which is available at rupees 119.25 and the face value for it is 2. The symbol for it is MANAPPURAM. Now Manappuram Finance Limited is a non-banking financial company. The company is engaged in offering gold loans, microfinance, housing loans and commercial vehicle loans. The company operates in the financing segment. Its activities include gold loan, money transfer, domestic money transfer, foreign exchange, SME and loan against property, depository services and commercial vehicle loans. Now, as is evident from the 1-year chart, this company went on a downtrend for the first half of the year, but since then has resumed an uptrend. It may also be forming a rounding bottom formation. However, the confirmation has not yet come. At 44.1%, FPI holding in this stock was at its highest at the end of the March quarter. The NBFC's non-gold AUM growth is expected to exceed annual targets in terms of contribution to total loans. NII is seen rising 15 to 20% for the March quarter, while profit growth is expected to be in the excess of 25 to 30% range. Nirmal Bang Institutional Equities, which met the company's management recently, said the NBFC has managed to cut costs for customers due to the advent of online gold loans. Besides, the safety of the locker is proving to be a big draw for women clients. Edelweiss Securities said while the gold portfolio's asset quality has been steady, there has been stress in microfinance, CV and two-wheeler segments which needs to be watched. As per publicly available Reuters data, the stock had 6 buy, 3 outperform, 1 hold and no sell ratings as of April 23. Now friends, as we said earlier, this is not our own research. This was carried out by a financial news website and we'll be providing a link to the source for this video in the description section. Please go through the link to build more conviction around your investment decision. Please don't treat this as a recommendation on our part. This and all other content that you see on our channel is intended only to be a piece of news. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.